Okay, the it is 1st July 2005. You are an audit manager at 40 and Co. You are considering a number of ethical issues which have arising on some of the firm's long-standing audit lines. The Horty and Co. is planning its external audit of Tree Company. Yesterday, the audit engagement partner Charlie Thrower discovered that a significant fee for information security service, which we were provided to Tree Company by Horty and Co. is overdue. Okay. So Charlie hopes you be able to resolve the dispute amicably and has confirmed that he will discuss the matter with the finance director Percy Marsh at the weekend, as they are both attending a party to celebrate the engagement of the Charlie's daughter and Percy's son. Okay. Now we have Bush Company. Bush Company, Harty and Co is the external auditor of Bush Company and also provides other non-audit services to the company while performing the audit for the year ended 31st March X5. The audit engagement partner was taken ill and took an indefinite leave of absence from the firm. The ethics partner has identifying the following potential replacement and is keen that independence is maintained to the highest level. Okay, Brain Smith, who is the also the partner in charge of the next services provided to the Bush Company, Monty Node, who was the audit engagement partner for the 10 years ended 31st March Expo, Cassie Dison, who introduced Bush Company as client when she joined the firm as an audit partner 5 years ago, who is also the partner in charge for the payroll services provided to Bush Company. Plant Company is a large private company with a financial year to 30th June, has been an audit client of OT and Co for several years. Alan Marshallow, a partner of OT and Co, has acted as an engagement quality reviewer (EQR) on the last two audits to the year ended 30th June at 4. At a recent meeting, he advised that he can no longer be EQR on the engagement as he is considering accepting the appointment as a non-executive director and sit on the audit committee of planned company. The board of directors has also asked OT and Co if they would be able to provide internal audit services to the company. Cool. Then we have Wheat Company, a listed company, is one of the Houthi and Co largest clients. Last year, the fee for the audit service 1.2 million. This year is expected to be 1.3 million, which represents 16.6 and 8.1 million income respectively. So far, so good. Now, let us look at the question. Which of the following statements correctly explains the possible threats to OT and co independence and recommends the appropriate safeguard in relation to the audit of tree company? Okay. An implementation threat exists due to overdue fee and tree could should be advised that all fees must be paid prior to the audit report being signed. A self-review threat exists due to a nature and audit work which has been performed. Uh, and an engagement quality review should be carried out. No. Um, a self-interest threat exists due to the relationship between Charlie and Percy, and Charlie should be removed as audit partner. So, option four, three only, is the answer. In line with the ACCA Code of Ethics and Conduct, a self-interest threat would arise due to a personal relationship between the audit engagement partner and finance director. So, a self-interest threat, not intimidation threat, would arise as a result of the overdue fee and due to the nature of the non-audit work. It is unlikely that a self-review threat would arise. Next question, taking into account the concern of the ethics partner, which of the partners identified as a potential replacement should take over the audit of Bush Company for the year ended 31st March 2005? Brian, Monty Knott, Cassie Dizon, or Patty Russo? I would suggest Cassie Dizon is the right answer for this part because Cassie Dizon has no ongoing relationship with Bush Company and would therefore be the most appropriate replacement as audit engagement partner to maintain independence. The appointment of any of the other potential replacements would give rise to a self-review or familiarity threat to independence. Next question. Which of the following correctly identifies the threats to Horty and co-independence and proposes an appropriate course of action for the firm if Alan Marshall accepts appointment as a non-executive director of planned company. Threats course of action. Self-interest and familiarity can continue with appropriate safeguards. Self-interest and review must resign as an auditor. Self-review and familiarity must resign as auditor. Familiarity and only can continue with appropriate safeguards. Uh, okay. For this, option two. Self-interest and self-review must resign as auditor if Alan Marshall accepts the position as a non-executive director for the planned company. Self-interest and self-review threat are created are so strong that can be implemented without restricting context and conduct. No partner or the firm should serve as a director of an audit client, and as such, Orty and Co. would need to resign as auditor. Uh, you are separately considering plant company request to provide internal audit service and the remit of these services if they are accepted. Which of the following would result in Horty and Co. assuming a management responsibility in relation to the internal audit services? Taking responsibility for designing and maintaining internal control system, determining which recommendation should take priority and be implemented, determining the reliance which can be placed on the work of internal audit for the external audit, setting scope of the internal audit work to be carried out. So, yes, option three. Assuming management responsibilities when the auditor is involved in leading or directing the company or making decisions which are the remit of the management, designing and maintaining internal control which to implement and setting the scope of work are all decisions which should be taken by the management. Next question and the last question of the scenario: which of the following action would Hotienco takes and maintain its objectivity in relation to the level of the fee income from weed company? Uh, well, the level of fee income should be communicated to those charged with governance. Okay, right. Separate teams should be used for the audit and non-audit work. No. Request payment of the current year's audit fee in advance of any work being performed. No. A request a pre-issuance review be conducted by an external accountant. So option is correct. Wheat company is a listed company, and the fees received by Hoti and Co. from the company have exceeded 15% of the firm's total fees for 2 years. Matters affecting independence must be disclosed to those charged with governance of a listed client, and appropriate safeguards should be implemented. In this case, it would be appropriate to have a pre-issuance review carried out prior to issuing the audit opinion for the current year. Okay, so 35 questions done, and that's it. Now we are moving to the next scenario. That is our now the next audit an accountancy firm with 6 offices and 15 partners. You are planning the audit of LV Foods Company, which has been an special manufacturing mobile phones. During the planning stage of the audit, you have obtained the following information. The audit team of Alvi Phones Company are entitled to purchase mobile at a discount of 10%. The finance director has commented that this is to encourage the audit team to be more favorable towards the company and to keep them on site. The audit engaged partner has assessed the potential value of the discount to be trivial and inconsequential. Individuals should take advantage of this offer. During the year, the financial controller of LV Phones was ill and unable to work. The company had no spare staff able to fulfill the role, and qualified audit senior of CL&Co was seconded to the client for 3 months. The fee income derived from the LV Phones company was boosted by this engagement, and along with the audit and tax fee, now accountants for 25% of the firm's total fee. From a review of the correspondence file, noted that the audit engagement partner and the finance director have known each other socially for many years and, in fact, went on holiday together last summer with their families. As a result of this friendship, the audit partner had spoken to the client about the fee last year's audit, 20% of which is still outstanding. So the question is now, which of the following correctly identifies the threats to independence and proposes an appropriate course of action for the firm if any of the audit team takes advantage of the discount threats course of action, self-interest, decline, the offer. Yes, the offer of gift from an audit client can create a threat of self-interest and familiarity. So the ACCA Code of Ethics and Conduct states the gift must be declined if they are offered as an inducement to influence the auditor's behavior. So even if they are trivial and inconsequential, the finance director has commented that the offer is intended to make the audit team more favorable toward the client. The offer is an inducement and must be declined. Yeah. Now the next question: which of the following actions should CLN code take maintain its objectivity in relation to the level of fee income LV phones? Ensure, ensure partners compensation is not significantly influenced by the client fees. Okay. Ensure the client base perform a pre post issuance review of the engagement if fees exceed 30% of the firm total income for 5 consecutive years. So one, two, and three. That is option two. Okay. The ACCA Code of Ethics and Conduct states when fees from a non-listed client represent 30% of the firm total fee for last 5 years consecutive years, the independence is threatened. So the firm must take all three of the actions stated. Now, next question. Which of the following correctly identifies the threats to independence and purpose as an appropriate course of action for the firm in respect of the audit senior's secondment to Alvi Phones Company. Threats, course of action. Okay. Self-interest and self-review. The audit senior should not have been seconded to LV Phones Company. No. Self-interest. Only the audit senior should be assigned to the audit team to increase efficiency of the audit. No. Self-review or only perform an engagement quality review. No. Familiarity and self-review threat. The audit senior must not be assigned to the audit of LV Phones. This is the right answer. In this case, the audit senior must not be assigned to the audit of LV Phones Company as a self-review thread will be created. The audit senior may be responsible for auditing areas for which they were responsible when on secondment. Any may not detect misstatements or may not wish to admit to misstatements if detected. A familiarity thread may also be created because the audit senior may have developed friendships with client staff while on secondment. Next option or next question. Which of the following should to maintain its activity in relation to the outstanding fees from LV Phones Company? So ask the client to pay the outstanding amount. Yes. Have an independent review of the work performed. Yes. Do not issue the audit report for the current year until the fees are paid. So one, two, and three. All three actions must be taken, should be taken by the firm if fees remain outstanding. Now, next question. Select one option from each column which identifies the type of ethical threat arising from the engagement partner friendship with the finance director and identifies as an appropriate course of action the firm should take to manage the threat to an acceptable level. Okay, ethical threat, uh, intimidation, familiarity, or self interest. I would say it's a familiarity threat. Mm. Now, what is the course? What should be the course of action? Remove the audit partner from the audit. You might be wondering why. So, friendships between the auditor and the client create a self familiarity threat, as the auditor may be too trusting of people they know well and may therefore exercise less professional skepticism. The audit firm would only need to resign from the engagement if there was no alternative engagement partner that would be assigned to the audit of LB Phones Company. The audit engagement partner has the most influence over the audit, and it would be possible to structure the partner's responsibility to reduce the potential impact while in charge of the engagement. The only way this can be achieved is to remove the partner from the audit and replace with different partner. Okay, next question. Let's use a different color now. It is 1st July 2005. You are an audit manager in NAB and Company, a large audit firm which specializes in the team audit of retailers. Okay. Miki Company, a food retailer, has approached NAB and Co to become its auditor. Miki Company is looking for a new auditor as the previous firm resigned without major notice 3 months ago without having started the audit for the year ended 31st December 2004. Miki Company has approached several audit firms since the previous auditor resigned, but all have declined to take the engagement. Miki Company must file its financial statement by 30th September 2005 in accordance with local legislation, and therefore has stated that the audit must be completed before this date. NAB and Company currently audit Goofy Company, Miki Company's main competitor. Okay. Then Goofy Company audit engagement partner for Goofy Company has been in place for approximately 6 years, and her son has just accepted a job offer from Goofy Company as a sales manager. This role would entitle him to shares in Goofy Company as part of his remuneration package. Goofy Company has requested NAB and Co provide tax advice to minimize the company tax liability. Management has suggested that the fee could be based on the level of tax saving achieved to ensure the payment for the service does not outweigh the benefits obtained. The fee is expected to be significant. Management has decided to establish an audit committee. The company does not have any independent non-executive director with recent relevant financial experience and have requested our firm assistance with this. Management has requested that the audit engagement partner assist by reviewing qualification and advise on technical financial competence of applicants. So match the acceptance consideration with the most appropriate reason for why they should be considered by NAB and Co before accepting the audit of Mickey Company. Okay. So the previous audit firm resigned without notice, and several firms have declined the engagement. There may be threats to objectivity and confidentiality that cannot be managed to an acceptable level. NAB and Co may not be competent to perform the audit. The fee may not be sufficient for the level of work that is required. The firm may not have enough resources to perform the audit at the time required. No, 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 no. Management of Miki Company may lack integrity. Yes, this is the most appropriate option for this. Okay. Next one. The audit must be completed before 30th September 2005. Uh, there may be threats to objectivity and confidentiality. No, NAB and Co may not be competent. No, the fee may not be sufficient for the level of work. The firm may not have enough resources to perform the audit at the time required. Now, the last one. Uh, Mickey Company is the main competitor of the Goofy Company and existing audit client of NAP Company. There may be threats to objectivity and confidentiality that cannot be managed to an acceptable level. Yes, this is the correct for this one. Okay. Um, as you know, difficulties retaining or obtaining an audit firm may indicate that the management of Mickey company lack integrity and audit firms are not willing to take on the engagement as the audit is required to be completed within a tight deadline. The firm will need to go through the acceptance process, obtain an understanding of the client, plan and perform the audit, and issue the auditor's report within 3 months. This will require sufficient resources to ensure the work can be completed to a high standard, and the firm may not have sufficient resource to achieve this. As Mickey Company is the main competitor of GoofyGo, another audit client of the firm, a conflict of interest arises, which create a threat to objectivity and confidentiality as well. Okay. Now, what is the correct order of the steps that NAB and Co should take in respect of the client conflict of interest arising? Perform an engagement quality review, obtain consent to act, implementing safeguards, inform Mickey Company and Goofy Company. Mm, option two, that is, first inform Mickey and Company and Goofy Company, obtain consent to act, implement safeguards, and finally, perform an engagement quality review. Okay. To manage the conflict of interest, the firm must inform Mickey and Company and Goofy Company, obtain consent to act, implement safeguard, perform an engagement quality review. Now select one option from each columns which identify the significant ethical. Okay, sorry. Significant ethical threat arising from the audit engagement partner and course of action the firm should take to manage the threat to an acceptable level. Uh, okay, for intimidation threat, remove the audit engagement partner from the audit. Familiarity threat, structure the audit partner's responsibilities to reduce the potential impact to the engagement. Wow. Self-interest threat, inform Goofy Company that it should not employ the audit engagement partner son. Okay, it is unlikely that a sales manager would be in a position to influence the financial statements and therefore threats to familiarity. Familiarity or intimidation are unlikely to rise. Okay, so it is a self-interest threat, by the way, and remove the audit engagement partner from the audit. As I said, it is unlikely that sales manager would be in a position to influence the financial statements, and therefore threats to familiarity or intimidation are unlikely to arise. A significant self-interest threat is created by the son receiving shares as part of his remuneration. So, as ACCA Code of Ethics and Conduct states that the direct or material indirect financial statement must not held by the audit team or an immediate family member of the audit team. So, the partner will need to moved from the audit. So due to father, due to son, father gonna lose his job. Okay, and then next one, which of the following statements is true in respect of Goofy company request for the tax advice to based on the tax service achieved? Option 4. The fee basis is acceptable as it does not relate to the audit fee. The fee basis is not acceptable to as contingency arrangement are not acceptable for any accountancy work. The fee basis is acceptable if both NAB and Co and Goofy Co agrees to it. The fee basis will not be acceptable as the fee is significant to the firm. And last, so which of the link statement is true in respect of the request for the assistance with the recruitment of independence non-executive director of Goofy company? No threat arises and no safeguards are required. Well, itself, first one is correct because ACC Code of Ethics and Conduct states that the reviewing qualifications and assessing competence of applicants does not generally create a threat to objectivity as the auditor is not making any management decisions that could cause a threat to objectivity. UFICO can provide this service if it will not result in the firm assuming management responsibilities. I hope it is clear till here, and let's move to the another scenario. All right. So, next scenario, you are an audit manager in Swift company, Swift and Co, responsible for the audit of Kingfisher company, a retail company, planning to list on a stock exchange within the next 6 months. The board of directors currently comprises the chair, chief executive, three executive directors, three non-executive directors, and the details of the three non-executive directors is given below. Terry Token. Terry was an employee of Kingfisher until retirement 6 years ago. On retirement, a non-executive director. Okay. So far, so good. So details of three non-executive directors is given below. Terry Toucan. Terry was an employee of Kingfisher until retirement 6 years ago. On retirement, Terry became a non-executive director. Terry receives a pension from the and salary for being a non-executive director. Terry does not own shares in Kingfisher Company. An as part of Pat's remuneration package included share options which had been exercised. Pat became the non-executive director 3.5 years ago, and on appointment, Pat left the company's pension scheme, sold all shares in Kingfisher Company. Linda Laurie Kate is an independent non-executive director of Kingfisher Company. Linda member of the board for 8 years and have extensive retail experience from previous employments. Okay. Proposed changes. Kingfisher Company management has been advised by the audit engagement partner about the need for compliance with corporate governance principles. Once the company is listed, the board of directors has identified two more potential independent non-executive directors to join Kingfisher Co. Once more directors are appointed, Kingfisher plans to establish an audit committee and a remuneration committee. Two potential directors are Francis Finch. Francis is currently the finance director of a listed multinational banking company and is a non-executive director and audit committee member for another company. Francis is agreeable to being a non-executive director for Kingfisher Company and be a part of fixed fee which is not related to profits. Francis is being considered for the role for board chair as the current chair is due to retire in 6 months' time. Mika Mako, the executive, is currently a finance director of a small retail company which does not compete with Kingfisher Company. Mika has expressed an interest in a role at Kingfisher Company, provided a contract with a minimum 3-year term is offered. Okay, so which of the following remunerations is not required to be implemented by the Kingfisher Company to bring the company in line with the corporate governance best practice? Okay, so, more independent non-executive directors must be appointed to ensure at least half of the board are independent. No. The board must appoint a workforce representative. No. Linda will need to be replaced as an independent non-executive director next year. The board chair must be appointed from within the company to ensure they have sufficient knowledge of the company. Yes. In respect of the Francis Finch, which of the following statements is okay? Francis could become board chair and sit on the audit committee as a person with recent and relevant financial expertise. uh, Francis could sit on the remuneration committee, but not be the committee chair. Yes, option two is the right one because the board chair must be independent on appointment. The board chair cannot sit on the audit committee, but can be a member of the remuneration committee, provided they are not the audit committee chair. Remuneration of the non-executive directors must be a fixed salary. Okay, and restrictions on the number of directors a person can take are only applicable to the largest 100 listed companies that, for example, FTSE 100. Okay, in respect of the Terry token, which of the following will comprise independence? Terry receives a pension from Kingfisher Company. Independence is compromised if a non-executive director was employed by the company less than 5 years ago, has owned shares in the company within the last 3 years, or receives remuneration from the company other than a fixed salary for the role of non-executive directors, such as pension. Okay. Which of the following are the advantage of appointing Mika Macau as a non-executive director of Kingfisher Company? Uh, Mika has close links to Kingfisher Company chief executive. Mika wishes to commit to 3-year contract. Mika experience in retail will facilitate understanding of issues, and Mika financial experience of useful if appointed to the audit committee. And finally, Mika wishes to commit to a 3-year contract. So I would suggest Mika experience in retail will first facilitate understanding of the issues faced by the Kingfisher, and Mika financial experience will be useful if appointed to audit committee. So two and three are the better options among all, as lack of independence due to the relationship with the chief executive, along with the request for a 3-year contract when all directors must stand for re-election annually, are both disadvantages to Mika taking a non-executive director position. Okay, which two of the following correctly explains corporate governance guidelines in respect of succession and evaluation of directors? Succession plan should be maintained for the board chair and chief executive. No. Annual report should explain the work of nomination committee, including the process for making appointments. Yes, this is cool and correctly explains corporate governance guidelines. And then performance of the board chair, the board, the individual executive and non-executive directors, and each committee must be evaluated annually. So option two and three are correctly explains
In accordance with the corporate governance code, there should be a formal and rigorous annual evaluation of the performance of the board, its committee, the chair, and the individual directors. Annual report should describe how the nomination committee has ensured appropriate appointments have been made, including the gender balance and diversity. Succession plan should be in place for the board and senior management, not just the chair and the CE, that is chief executive. The nomination committee must comprise a majority of independent, non-executive directors, but does not require all members to the NEDs, that is non-executive directors. So far, so good in this session. I hope we get it. See you next time. Till then, take care. Bye bye.